Hi, this is Will Cook of the Will Cook Group at Bennion Deville Homes. Welcome back to my video blog. Today we're going to talk about what's been going on in the greater Palm Springs area real estate market. Today we're going to talk about what's been going on in the greater Palm Springs area real estate market. But before we get started, I'd like to bring your attention to a couple of buttons on the video blog. If you're a buyer, click Search All Homes and we'll send you a list of homes based on the criteria that you select. If you're a seller, click Free Market Snapshot and we'll send you an estimated value of what your home is worth today. Now back to our topic. At 6.3 months of sales, our market is in a balanced or neutral position. However, this reflects a positive trend, as this is 1 month of sales, or 1 month less in terms of a ratio than it was last year at 7.3. As a reminder, a 6 months absorption rate, or months of sales, is a balanced market, with a higher number giving a bias towards buyers and a lower number than 6 indicating more of a seller's market. If we look at the sales or absorption rate by price range for all of the Coachella Valley area cities, we can see that the highest absorption rate lands in the properties that are listed for over $1 million. That absorption rate is 18.7, meaning it would take 18.7 months to sell all homes that are listed for over $1 million if no other homes came on the market. This, however, is a positive trend. At this time last year, the number was 20.9. As you can imagine, the lower price points have a lower absorption rate because there are more buyers that can qualify for those types of properties. The homes priced below $200,000 have the lowest absorption rate at 3.2 months of sales, which is still actually lower than last year, which was trending at 3.9. As of January 1st, 2015, our inventory stood for the entire Coachella Valley at 4,585 units, which was 10% lower than this time last year when we had 5,092 units on the market. However, this is exactly the same number that we had on January 1st of 2015, which is kind of an interesting point. Much of this is the result of a higher sales volume numbers in the last few months of this last year compared to a year ago. At $340,000, our median price for detached homes for the entire valley as of January 1st is effectively unchanged from last year at this time. However, this year's change in the median price for valley condos has increased about $2,000, or a gain of just under 1%. The yearly change in the median price of individual cities shows a generally positive trend for detached homes and a slightly negative bias for condos. In the detached market, Desert Hot Springs and Palm Springs continue to be the valley's leaders with 15.6% for Desert Hot Springs and 8.1% gain for Palm Springs, while Palm Desert and Rancho Mirage each experienced a year-over-year reduction in values. After a period of stagnation, a very positive indicator in our market is the growing trend in long-term sales volume in both detached homes and condos. Condo sales rose 9% year over year and detached sales rose 2.8% from last year. Since the Fed rate increase in December, interest rates are still hovering around 4% and slightly higher. Inflation is expected to increase in 2017, and as inflation increases, bond prices move lower and mortgage interest rates typically increase. But most experts do not expect interest rates to go above 5% in 2017. Interest rate volatility, along with market uncertainty, is expected with the new presidential administration, but the economy seems to be strengthening. We are projecting that our local real estate market will continue to improve overall, which makes this a great time to consider buying or selling a home in the Greater Palm Springs area. Thank you for watching. If you have any other questions or topics that I can talk about in my video blog, please give me a call or send me an email, and I'll make a video about it. Thanks again. See you next time.